The big hope is that the weekend banking conclave starting today and ending tomorrow at Pune between PSU bankers and the finance minister and the prime minister will yield some concrete reforms for this much beleaguered set of entities. What can they be? What are the low-hanging fruits? Dr. Narayan, former finance secretary, and also someone who has chaired a lot of private sector banks, and Mr. S.L. Bansal, former chairman and managing director of Oriental Bank of Commerce, joins in. Good morning to both of you, sirs. Dr. Narayan, you've seen the way the banks are run from your perch as the finance secretary. What do you think can immediately change at all? Do you think that if the Prime Minister puts his mind to it, even without changing the Banking Regulation Act, he can seminally change the running of companies?
Absolutely, because you have I would say you have a great opportunity here. The banks are facing a lot of challenges. One of the challenges is, of course, the huge NPAs that they have accumulated. The other challenges is the low capital base that they have. The third, I would think, the most fundamental challenge is, where are they headed? You have the private sector banks starting to do extremely well with a very diverse portfolio, and the public sector banks having to handle the portfolios of both the lower income, the agriculture sector, as well as the infrastructure sector. So I think there's a great opportunity now for settling the strategy of the way forward for the public sector banks, which I would say after 40 years of nationalization, here is an opportunity to say, okay, this is what public sector banks are all about. And let me explain this by a couple of sentences. If you look at what China is doing, China is using its banks to create capital. It is backing up the investment, it is backing up the lending of the public sector banks, even into infrastructure projects, into rural areas, etc. And it's backing it up by creating a support from the central government which would enable them to go out and lend even to risky assets, because the important thing is to create capital. To create capital for infrastructure, create capital for the rural areas, etc. Is this a model that the public sector banks can adopt? Or is there an alternate model of just go headlong and compete with the HDFCs, the ICICIs, the Axis banks and others? They compete with the private sector banks and create themselves as a banks. So I do think that in a way the banking sector here is at the crossroads, and I would very much be looking forward to what the Prime Minister and the Finance Minister says to the directions that they would like to set for the public sector banks and the kind of goals. I don't think this is an ordinary meeting. I think this is a meeting which would change the kind of things that the public sector banks should be doing.
Okay. Let's get Mr. Bansal into this conversation as well. Mr. Bansal, good morning. We were speaking with Ms. Bhattacharya of SBI yesterday, in fact, and she said that a whole host of issues like HR, asset quality, risk management, capitalization is what she would look forward to in this Gyan Sangam. But if you had to pinpoint the most important issue that needs to be addressed and how it should be addressed, what would it be?
Sonia, see, good morning. There are two major issues before the bank nowadays. Number one, first is, of course, asset quality, and second is HR. Now, look at asset quality. Now, I completely endorse Mr. Narayan. See, this is the cost of development. We have accumulated few NPAs in our books, and now everybody is questioning the banks how they have financed these assets. Now, see, from 2000 to 2014, we have grown, and especially during the one decade from 2004 to 2012, we have grown at 8 to 9%, when credit has grown plus 25% on annual basis. So this is the outcome of that. Few assets have gone bad, and because of various reasons. It's not that only the lending has been very bad, but various reasons. There were regulator, there were government, there were so many entrepreneurs also. So you need to give the confidence to the banker. You go ahead, take decision. We are with you. If there are some assets which are slipped to NPA category, we are here not to question you, but to find the solutions. And we need to find the solutions for these NPAs. We need to revamp the way DRTs are functioning, BIFR is functioning, so that the banker can get the confidence. If they are taking decision, they will be in a position to handle it confidently. And number two major issue is leadership. See, from the last 6-7 months, so many banks are headless. Even now, 4 banks, major banks, Syndicate Bank, Bank of Baroda, PNB, and Canara Bank are without any leader. Whatever you may say, but if there is nobody at the helm of affair, naturally the people down the line doesn't get the direction, and the people feel that chalta hai, and this is really very bad for the banking industry. You cannot grow, and you cannot grow very fast unless there is a direction. This we have been seeing from the last 7 months. We have seen a decisive government, and the way Prime Minister is leading from the front, that we have seen. So it makes the difference. So this is my view. We need to look at these 2 major challenges.
Mr. Bansal and Dr. Narayan, there's no taking away from the fact that the economy has created a lot of NPLs and the banking sector was, partnering the growth. All that is taken. But so did the private sector banks. There the NPL is half the percentage of NPLs you have in the public sector banks. There is no denying that there is a lot of political pressure and other kinds of pressure when public sector banks lend. Whether it is an SEB bailout or some way out companies like Zoom developers, pressure comes. Mr. Bansal, directly to you. In some of the banks, especially the one that you just chaired, they have split the MD and CEO post. Now, should we see this as reform? What kind of a chairman would you desire? Would the nature of that chairman give you an idea whether the government is serious about board independence? Really, what is the next step you will watch for in terms of the chairman appointment in these 4 banks? Mr. Bansal.
See, Lata, you need to understand the composition of the board of the public sector bank. There are 5 set of directors in a public sector bank. Number 1, employee director, officer director. Number 2, shareholder director. Number 3, directors appointed by the government. Number 4, RBI director and Government of India nominee director who are working director. And 3, whole-time director, 4 whole-time director in different banks. Now, these 5 set of directors working at a tandem as a cohesive team becomes so difficult. I don't subscribe to your views that there was a lot of pressure on the public sector bank. But see that.
Then why were the NPLs double that of private sector banks? I mean, ICICI Bank is as large a bank as the 2nd, 3rd and 4th largest public sector bank. Axis Bank is as large as the 5th, 6th, 7th public sector banks. I mean, if your size is the same, you're lending to the same economy, why is somebody's NPLs double that of another category? I'm just asking you, what is the reform you're expecting so that this changes? Don't say changes in the economy. That is going to affect everyone, and that can't be done in a 2-day seminar. What can they change among the banking working that, at least going forward, this kind of a difference is not there?
See, Lata, give me a minute. See. Yes. Even ICICI Bank NPA is close to 3%. Now the point is, now suppose any account slip to NPA category in public sector bank and in private sector bank, the public sector bank can settle it for 70%, 80% based on their wisdom, and nobody will question them. But in public sector bank, if you settle that account for say 60%, 70%, 80%, then there will be so many hue and cry, so many people will question their judgment, and therefore the management thinks, okay, let it continue with the NPA and therefore I am not responsible. See, this is a major concern, number 1. Number 2, now all these private lendings, when we were giving finance to all these agriculture and MSME borrowers, all of a sudden this debt waiver come, and this has completely vitiated the credit culture in the entire economy. Now, who is responsible for that? See, nobody wants to pay back the money in the rural areas. Now, we need to send a clear signal to the public that no more debt waiver. We are going to give you concession, but no more debt waiver. Now, you need to improve the credit culture. See, 3rd thing, so many assets are lying unused, and banks are fighting in the DRTs, in the BIFR, and nobody is ready to take a call, okay, let us dispose of these assets, make these assets as viable assets by taking some hit. And then, see, Mr. Narayan was talking about even if the banks in China are lending for the risky assets, then the government is supporting them. So let you support the bank. Without banking, you can't run this country. Now, let us come out with a clear vision.
Yeah. Point taken. Dr.
So let us come out with a clear-cut direction.
Dr. Narayan, exactly to take that point, what would you therefore look for in terms of concrete decisions tomorrow?
You see, I totally agree that, you have to give operational flexibility and operational responsibility to the board. A separation, I was in a private sector bank some years ago. A separation from the board and the chairman helps in the sense that if the chairman is a non-executive chairman, it helps him to make sure that the board decisions are both fair and objective. It does help. So I do hope that this conclave will examine the particular problem that was mentioned. That is, okay, the board is composed of so many diverse interests, that is it possible then to make it a much more professional board which can take professional decisions and take these things forward. The second is, government must be clear. Government must be clear. All the public sector banks out on their own to be questioned when they take the wrong decisions, or the government or the public sector banks, our own government banks, which we must be owned, which means those decisions in a way reflect the government policy of that particular time. If it's a loan waiver, then the government must go out and support the public sector banks with finance. If there's a bad debt, governments can come forward and say, in fact, I don't know whether you recall Lata, that in 2002, 2003, we did all this. We cleared up a lot of debt in the textile sector, in the steel sector, etc. Because government was with us. I remember.
No, I take your point, Dr. Narayan.
A meeting to.
Yeah, no, I take your point, but I'm just hoping that in the conclave we are not talking macros, but something micros in terms of changing the actual operations.
No, if we are going to talk on. If we are going to talk only about day-to-day management of what's going on today, etc., I think an opportunity for looking at larger things would be lost.
Okay.
That is why I am harping on the larger things, because then it would be business as usual again.
All right. Well, we'll have to wind up this discussion on that note. Mr. Bansal, thank you very much for joining us.